Welcome back to Unusual Indicators, where we are going through the hundreds of existing indicators, trying to find unusual and useful ones to help make us all better traders. Warren Buffett once said, technical analysis is fucking stupid. But the future is now, old man, because today we are going to be looking at the price channel indicator, which based off of an input parameter length that you can set will automatically plot the high and low support and resistance lines on your chart. Hopping into the chart now, you'll get an immediate idea of what I am talking about. The price channel study is turned on. The default length is set to 20. There are two plots, the lower band and the upper band. This means that the lower band represents the lowest point of the last 20 bars, while of course the upper band represents the highest point of the last 20 bars, formulating your automated support and resistance levels. And of course, if you wanted these to be longer term support and resistance levels, you could come in and change that length parameter to make the channel look really however you would like it to, what fits your trading style the best. Pretty simple indicator today. I'm not going to insult your intelligence by taking 5 more minutes to explain it. So let's hop right into the strategy that I have built utilizing this indicator. And let me show you something cool that I have done. So as you saw, the channel set sort of the same length value for both the lower band and the upper band. Well, for my strategy, I want to be entering quickly, but letting the winners run. So what I've done is I've added 2 price channels. I've added a 5 length and that 20 length. And on the 5 length, I just turned off the plots for the upper band. And on the 20 length, I've turned off the plots for the lower band. This now gives me the lowest point of the last 5 bars, but the highest point of the last 20 bars. So you see how you can sort of combine price channels like that for different specifics of support and resistance rather than just the one length variable, same distance price channel. Now, how am I utilizing these different variable lengths? Here is my strategy code. I am buying when the current candle closes below the lower band price channel set to a length of 5, and if the current bar is closing above a 200 simple moving average, which I also have plotted on my chart from within this strategy itself. Then, of course, we sell when the high is crossing above the price channel's upper band. And remember, the price channel's default parameter is 20. So I'm just using the default here. That's why you won't see me specifically laying out the length parameter. If you don't lay out the parameter, it utilizes the default. So sell when the high crosses above the 20 length price channel's upper band. I've also built a stop loss if the price closes 10% lower than the price we got in at. And of course, here is our add order functions, just so these orders are actually being represented on the chart itself. If you're interested in that sort of codified trading strategy that I just showed, of course, I just sort of showed you that one for free, but if it's easier for you to download, it is available along with over 25 other strategies, along with scanners, indicators, custom watch list columns, etc., all on my website, daytradingstrategies.net. Link in the description down below. Go click it, check it out. Become a better trader today. You come for the indicator, but you stay for the strategy result. So let's go ahead and click through a couple of stocks here. Take a look at how the strategy that I built is performing. If you don't know, this floating P&L indicator down here will show you the P&L of the strategy. I also have my own custom backtest study up here if you would like to look at some more in-depth numbers. SPY, of course, the S&P 500 ETF, we're looking on the daily on all these charts, up $19,500. Not too bad. Oh, I should also clarify, this is taking $10,000 positions as well. My strategy is you can change that using this input if you would like to when you download this code. NVIDIA up $48,000. Of course it is. Block I always like to look at this chart because it's gone both really hard up and really hard down. Only up $1,900, did okay, actually better back here when it was just trending up, even better than it did in this huge kind of rip here. I think the big rips like this, even the bullish rips, they add volatility to a ticker, which ends up getting me stopped out quite often, even on the harsh move up. So this is a pretty good instance of like, maybe a strategy like this works a little bit better on some less volatile names, right? Like some more grindy kind of names, right? Let's actually take a look at something like AMC. How did AMC do? Okay, this one shot up so much here. It made so much money on the way up that it's still pretty green. But just taking a look at a couple more tickers that we like to look at. AMD looks good. Apple looks good. Tesla is actually not great. Interesting. Tesla, another pretty volatile ticker. Looks like it just gets stopped out a handful of times. Just before hitting that profit target on a handful of these. Interesting. But Tesla, not amazing. They don't all win, of course. I'll just flick through one more that I'm thinking of off the top of my head. MU looks pretty dang good. Let's hop into a 5-minute chart over the last 180 days and click through some of the sort of same names just to maybe get an idea of how this indicator could work for a day trading strategy. So SPY, green, NVIDIA looks real nice actually with a 70% win rate as well. Looking real nice on NVIDIA. Tesla didn't look so good on the daily. Also doesn't look so good on the 5-minute. So the sort of immediate reaction I'm getting, and this is like my first pass at this, like I've not even really messed with the lengths, messed with the stop loss, messed with the moving average length. You could take this code and easily mess with all these variables and probably make it way better. This is just to help give you all the idea, right? But my first kind of pass at this is, maybe this kind of indicator slash strategy you might build with an indicator like this would work better on lower beta stocks. Not the real volatile stuff, but the stuff like Apple. Apple's just a grinder. It's a mega cap grinder, largely choppy. So buying low, selling high in the chop seems to do okay. Whereas like Tesla is a much more rippy stock, right? So you just kind of get stopped out of those much more often than you do these sort of nice, simple bouncers like this. I don't remember even what I've looked through while we're talking, but the day trading, it looks okay, right? In the grand scheme of things for this indicator, it's really not even about a strategy built around the indicator, kind of like I've done here. It's more about getting those automated support and resistance lines on your chart that you can make use of inside of other trading plans. Right now, using this price channel indicator, you can build your automated levels where you might want to buy and sell based off of other trading strategies, if that makes any sense. But just clicking through the alphabet here, you do see this strategy. I mean, it's still green. I think every stock I've clicked through so far has been green. I've been paying a little bit of attention, but so it's definitely still a useful strategy. But once again, the more important part here is just getting these automated support and resistance lines on your chart. If you did enjoy this, if you do enjoy this series, please take the half-second, hit the like button for me. It really does mean a lot. And make sure you're subscribed so you don't miss out on these videos in the future. And hey, if you have any unusual indicators that you use, let me know in the comment section down below. I'm always looking for ideas for what to make my next video on. And as always, check out my website, daytradingstrategies.net, in the link in the description down below. I'll catch you all in the next one.